So it's delighting to see you again in this weekend edition of Into Vietnam, which summarizes the most outstanding macroeconomic events in the past week, following some major stories. Vietnam's credit rises 12.51% in 2013. The government announces solution for socio-economic development this year. This week, Business Talk is joined by Ms. Karen Fincasten, the IFC Vice President in the Asia-Pacific region, who recommends solution to bad debt resolution in Vietnam. Let's begin with this week's figures. The Central Bank Governor Nguyễn Văn Bình was quoted saying Vietnam posted annual credit growth of 12.51% in 2013, quickening from an expansion of 8.85% over the previous year, while lending rates this year may ease. He says in principle interest rate in 2014 will be kept as now. If conditions permit, they may continue to ease 1 to 2 percentage points per year. He also said the deposit rate would stay unchanged.
According to the Ministry of Industry and Trade, the country's export targets will be $154.4 billion in 2014 and $160.3 billion in 2015, with an annual growth rate of around 10% compared to last year. A report on the industry and trade sector's forecast for 2014-2015 put annual export growth in 2011-2013 at 22.3%. Total export revenue reached $96.9 billion in 2011, $114.5 billion in 2012, and $132.1 billion in 2013. Despite strong annual export growth, the ministry said the export sector remains vulnerable as foreign invested enterprises make up an increasing proportion of export revenue, but their products are of low added values since they rely on trade labor to implement subcontracts with foreign partners. Meanwhile, exporters are still heavily dependent on materials imports, especially in garment, textile, footwear, and electronic sectors, which cause production costs to rise and thus cut into the sector's competitiveness. The ministry's report says in the next 2 years, the country will have to keep its trade deficit at 6% of total export revenue. Therefore, the ministry will impose more controls on imports of non-essential goods and those already produced in the country. Import spending this year is expected at $154 billion, up 17% versus last year. Vietnam is striving to earn at least $12 billion from exporting footwear and bags this year. In 2013, Vietnam's total export turnover of these products hit $10.32 billion, up 18% from the previous year. Of the figure, $1.92 billion came from the exports of bags and suitcases, a year-on-year rise of 26%. The European Union market accounted for 33.1% of the leather and footwear sector's total export turnover. Meanwhile, the US remained the key importer of Vietnam footwear. Vietnam now ranks second among shoe exporters to this market, following China. Currently, about 1,100 enterprises are involved in footwear production in Vietnam. They have employed 720,000 workers. In addition, thousands of individual producers and handicraft villagers have taken part in exporting footwear products.
Coming up next is some major macroeconomic and investment news.
The government has issued its first resolution in 2014 on major tasks and solutions to realize the socio-economic development and budget estimate plan for 2014. The overall targets of the socio-economic plan for 2014 approved by the National Assembly include macroeconomic stability, inflation curbing, and reasonable growth rate. Accordingly, Vietnam hopes to obtain GDP growth rate of around 5.8%, export turnover increase of about 10%, excess of imports over exports at 6%, CPI increase of 7%, total investment for social development of around 30% of GDP, state budget overspending of 5.3%, poverty reduction of 1.72%, and 1.6 million of new jobs. To fulfill the above targets, the government will focus on conducting flexible and effective monetary policy and tight fiscal policy, practicing thrift, implementing 3 strategic breakthroughs, creating favorable conditions for businesses to access to capital, and comprehensively restructuring credit organizations. Under the resolution, the government will also speed up SOEs equitization, boost non-core divestment, shift from processing and manufacturing to production, deeply integrate into the global value chains, ensure social welfare, and improve people's living standards. SSBC Global Research released a report predicting that Vietnam dong will stay stable this year owing to better economic fundamentals, but worse than loosening measures, if any, could put the currency at risk. The US dollar Vietnam dong exchange rate has been stable for 7 months now, since the State Bank of Vietnam depreciated the local currency by 1% in June, at 20,828 Vietnam dong to the dollar on the interbank market, after initially weakening to 21,250 Vietnam dong per dollar. The local currency has stabilized to trade around the new midpoint. It's also noticed that the foreign exchange rate has been stable for a long time since December 2011, before the central bank weakened Vietnam dong last year. In its report, the bank researchers refer to several factors that have kept the local currency stable. The balance of payments continued to stay on the stabilization trend. The trade balance rebounded in the second half of 2013, thanks to better exports supported by the previous currency devaluations and seasonal factors. Structural advantages such as competitive labor costs could also have contributed to the brighter export outlook. In addition, the combination of modest trade surplus and strong remittance inflows will continue to provide current account support for the currency.
In 2013, Debt and Asset Trading Corporation, or DATC, signed 15 contracts to buy debt values of nearly 1.8 trillion dong. The corporation focused on negotiations with commercial banks to buy bad debts, mainly of state-owned groups and corporations, including the Vietnam Shipbuilding Industry Corporation, restructured and converted 5 state-owned enterprises into joint stock companies. In 2013, total revenue of DATC was 530 billion dong, including revenue from debt trading activities of more than 326 billion dong. In 2014, the DATC targets to restructure 20 businesses, including restructuring debts of 12 enterprises, which are changed from 100% state-owned into joint stock companies. In its Fixed Income Report 2013, the Vietcombank Securities Company, or VCBS, expects the bond market will continue to be vibrant in 2014, thanks to abundant supply and strong demand for all types of bonds. Regarding bond supply, the report says the amount of issued bonds will increase sharply with the growing capital needs of the government to fund important projects and to cover budget deficits. Besides, businesses also have needs for long-term funding sources. On the demand side, the report says it will continue to be strong as banks will maintain prudent lending policies and continue to invest in bonds to seek safety. Two huge financial resources of the banking system in 2014 come from 132.56 trillion dong in bonds and bills maturing in 2014 and special bonds from the Vietnam Asset Management Company in exchange for bad debts. The VCBS forecasts that yields will fluctuate around the levels of the last 6 months of 2013, as inflation expectation in 2014 will remain low at around 7%, and the balance between supply and demand. Vietnam's stock market is forecast to witness a boom in share supply this year as several companies opt for initial public offerings or IPOs. The Vietnam National Textiles and Garment Group of Vinatex is finally expecting to launch an IPO in the first quarter of this year after failing to do so several times in the past. Vietnam's garment and apparel industry is becoming more appealing to investors because it will be among those that benefit from the Trans-Pacific Partnership or TPP when it concludes and comes into effect. The Vietnam Motor Industry Corporation or Vietnam Motor has also been urged to equitize in 2014 and therefore is likely to launch an IPO. The national flag carrier Vietnam Airlines and VITV are also preparing for their respective IPO. A representative from the Corporate Finance Department said the restructuring of state-owned enterprises, including the equitization efforts, will lead to an increase in the supply of high equity shares in the market. According to economic expert Vũ Đình Ánh, the supply of shares in the market will be plentiful this year, in part due to Decree 108, which came into effect on November the 11th, 2013. The decree stipulates that joint stock companies must be listed on the stock exchange within 1 year after they start selling shares to the public. The Vietnam Automobile Manufacturers Association says auto sales in the local market hit more than 110,500 units, up 19% from the previous year. This is totally unexpected in the context difficulties remained, and the auto sector had adjusted its sales target many times, up no more than 10%. In details, less than 10 seat car sales rose 25%, while those of truck and commercial vehicles rose 16%. Reviewing auto sales in the past year, the sales had been slumping many times despite a clear year-on-year improvement. Even in the hot period of the sector in November, Vietnam posted a slight auto sales from the previous month, dampening any expectation from the industry. The unexpected rise in auto sales for the whole year was partly attributed to the surge in the sector in the final month of the year. In details, total car sales hit more than 13,200 units in December, up 30% from November and 32% on year. The positive signal has prompted the Walmart to introduce the auto sale target of 120,000 units this year, a 9% increase from 2013. Vietnam's auto market saw a significant increase in the imports of completely built units. The General Statistics Office revealed CPU in 2013 hit 34,500 units, worth $709 million, representing a 25.9% rise in volume and 15.2% rise in value from 2012. At the same time, locally assembled car sales were lower, with Walmart members sales hit more than 96,690 units, up 20% from 2012. The sixth negotiation session of EU-Vietnam Free Trade Agreement opened in Brussels, Belgium on January the 13th. The subject matter of negotiations include trade of goods and services, investment, customs cooperation, the rule of law region, competition, sustainable development, institution, and legislation. Addressing the opening session, heads of the Vietnamese and European delegations emphasized the goal to finalize the negotiations soon and expressed their determination to fulfill the objective. They asked experts to speed up the progress of negotiations and to conclude technical negotiations of some contents in which both sides do not have differing views. For the contents, groups of experts should continue negotiations to narrow the gap between the parties. In the coming days, delegation heads will also debate viewpoints and orientations for important areas to accelerate the negotiation and devise a roadmap for completing the Vietnam-EU FTA negotiation. And now, for foreign trade news, we continue the program.
Government economists are predicting significant expansion for Vietnam's agricultural exports in 2014. According to the Vietnam Fruit and Vegetable Association, 2014 is another bumper year for vegetable exports, which have experienced annual growth rates of 20% to 30% in recent years. The Vietnam Paper Association, in turn, has forecast that the export volume of paper will be around 125,000 to 130,000 tons, with total revenue remaining relatively unchanged from 2013 at $900 million. For rice exports, the Ministry of Agriculture and Rural Development and Vietnam Food Association said the export outlook is expected to remain unchanged compared to 2013. VFA says Vietnam's rice exports will reach around 6.5 to 7 million tons this year. China overtook the Republic of Korea to claim the position as the fourth largest importer of Vietnamese seafood in 2013, with shrimp exports accounting for over 60% of the total figure. According to the Vietnam Association of Seafood Exporters and Producers, or VASEF, last year Vietnam's seafood exports to China totaled almost $560 million, up 38% year-on-year, of which shrimp exports increased 53% against 2012 to about $350 million. Shrimp imports into China interrupted due to its supply shortage caused by early mortality syndrome and high shrimp demand for processing. Vietnam secured the third place among the world's shrimp exporters in 2013 with a total value of $2.5 billion, representing a yearly rise of nearly 33% and accounting for 44% of its total aquatic export turnover.
Normally, in the previous years, when the Tet holiday approached, the shortage of goods supply and price hike often occurred. This year, Ho Chi Minh City has prepared carefully to ensure the goods supply and stabilize the prices of commodities. More in our business report.
According to the report by the Ho Chi Minh City's Department of Industry and Trade, the main sources of goods for the city are coming from businesses who take part in the market stabilization program, accounting for 30 to 40% of the market share, supplies from the wholesale markets for fruits and vegetables, and seafood, accounting for 60 to 70% of market share. Other companies account for 10 to 20% of market share. Until now, businesses participating in market stabilization program have basically completed the plans of goods supply, with the supplying capacity up by 114% compared to targets set by the authority, and up by 70% compared to last year.
Thì cái công việc dự trữ là chúng tôi làm việc với các nhà cung cấp. Thì là đối với các cái mặt hàng mà có thể đưa về tổng kho thì cái việc dự trữ đã xong, còn đối với những cái nhóm hàng mà phải đặt với nhà vườn hoặc là phải trong quá trình nuôi trồng thì chúng tôi cũng đã làm cái việc ứng vốn cho các cái hợp tác xã, các cái farm để có cái giá cả và cái hàng hóa nó ổn định. Nét mới của cái việc kinh doanh Tết năm nay thì Sài Gòn Co-op chúng tôi tiếp tục thực hiện chương trình Tết Việt hàng Việt.
2013 is the first year that Ho Chi Minh City implemented the stabilization program extensively and intensively without using the state budget. Credit institutions also supported businesses by offering bank loans with the interest rates of 6% per year to ensure that businesses have enough capital for production and providing stable sources of commodities for market during and after the Tet 2014.
Và chúng tôi cũng yêu cầu là các ngân hàng phải tiếp tục gọi là hỗ trợ cho các doanh nghiệp còn lại. Có thể là các doanh nghiệp này trước đây tôi chưa có nhu cầu, nhưng mà bây giờ người ta có nhu cầu thì khi có nhu cầu thì các ngân hàng phải hỗ trợ kịp thời và đầy đủ theo các cái cam kết của mình đã cam kết với thành phố trong cái chương trình bình ổn này. Cái thứ hai đó là cho vay sản xuất kinh doanh bình thường đối với các doanh nghiệp hoạt động bình thường để phục vụ cho cái sản xuất hàng hóa, cho cái chủ yếu là phục vụ cho cái dịp Tết sắp tới. Và các ngân hàng thương mại cũng đã đăng ký với ngân hàng nhà nước một cái lượng vốn tương đối khá lớn, đó là 45.000 tỷ đồng.
According to the municipal authorities, prices of goods participating in the stabilization program TED 2014 will not go up during the 2 months of TED. These businesses have plans to offer discounting prices, promotion programs, diversified distribution channels with various sale programs from 5 to 49%, offer gifts and sweepstakes. Also, during the days right before TED, there will be large discounts for necessities such as eggs, poultry and meat.
Thành phố cũng đang chỉ đạo vấn đề kiểm soát thị trường. Vì nếu chúng ta là đối với những cái dịp mà có nhu cầu mua sắm tăng cao của người dân mà thiếu sự kiểm soát thị trường đối với hàng gian, hàng giả, hàng kém chất lượng thì đó là một trong những điều kiện sẽ ảnh hưởng đến cái quyền lợi cũng như ảnh hưởng sức khỏe của người dân thành phố. Do đó chúng tôi hết sức là quan tâm, đã chỉ đạo cho Sở Công Thương rồi Chi cục Quản lý thị trường của thành phố phối hợp với lại các quận huyện để có một kế hoạch giám sát nó chặt chẽ.
According to the guidelines from the Ministry of Industry and Trade, the Municipal Department of Industry and Trade will closely cooperate with related departments, People Committee of Districts to master the market to meet the demand of local consumers.
It's time for the business talk of the week. The Vietnam's banking sector has undergone one of the toughest periods with high non-performing loan ratio. The situation was partially due to cross-holding in corporate sector. What should Vietnam do and what should it learn from international experience in settling the problem? Ms. Karin Finkelstein, the IFC Vice President in the Asia-Pacific region, has the answer to the bad debt resolution in Vietnam. First of all, thank you so much for joining our program VITV Vietnam on VITV. And so we begin with the first question. As a financial institution working in Vietnam in the past 15 years, what do you think is the biggest challenge of the Vietnamese banking system at the moment?
I think the biggest challenge that's getting a lot of attention are the high level of non-performing loans. But I think embedded in that challenge are a couple of other issues related to the efficient allocation of capital and really the way the banks are governed, the way they look at risk, the way they allocate their capital really needs to be reformed. And so I think we really support at IFC the government's decisions to take steps to reform the banking system. We at IFC have also been trying to play our role by investing equity in banks, by sitting on the boards of banks and doing capacity building within the banks in these key areas. I think as far as the NPLs are concerned, the creation of the Vietnam AMC is a great step in terms of helping the banks take the non-performing loans off of their balance sheets, and then that will allow the banks hopefully to raise new capital. And then if we can have the improved standards in terms of governance, in terms of risk management, then hopefully the banks can play a role going forward in terms of the growth of the economy and allocating the capital more efficiently.
M&A is seen as a good measure to reduce cross-holding in the Vietnam banking system. Do you think it's good for Vietnam at the moment?
Yeah, I mean, I think M&A is a way for more efficient companies can take over less efficient companies and hopefully operate them in a stronger way. It's also a way of consolidating industries that are too fragmented. But the key is transparency and making sure these things are done on a market basis, that the purchases are clear in terms of price, and that, again, that the ownership, who owns what, is stated very clearly.
As a global investor, do you think that the M&A market in Vietnam attractive enough?
We are definitely interested in looking at investing in companies in Vietnam. I think the long-term prospects for the country are good. There's the infrastructure is developing well. Obviously, there's a lot of labor efficiency here in Vietnam, an educated workforce. So I think Vietnam should be a popular M&A destination. I think one thing that would enhance that would be to allow private investors and foreign investors greater access to companies in Vietnam. And I think that's a key part of the state enterprise reform is really looking at how can we diversify the ownership of these state companies so that you can get more efficient practitioners to buy into these companies.
And what do you think about the legal framework for M&A activities for other foreign investors in Vietnam?
Well, one thing, like I just mentioned, or as I just mentioned from the legal standpoint, is I think in certain cases the private sector is limited in terms of some of the sectors that they can go into because they are monopolized by the state companies. So at IFC, we think the government should look seriously at state enterprise reform and allowing the private sector to get involved in some of the sectors that are currently run by the state, and also should look at accelerating the equitization process and really look at how we can get more efficient management and ownership into some of the state enterprises. It is very natural in economies for governments to hold natural monopolies or certain strategic assets, but I think many of the state enterprises in Vietnam have gotten into sectors that can be very efficiently managed by the private sector. And they're great examples around Asia of where the private sector has really helped to reform different sectors and is performing very effectively, whereas many of the state companies, as we've seen, can become a drag on the banking sector.
Does the International Financial Corporation have any specific plans to help Vietnam resolve non-performing loans and improve the banking system in general?
Sure. Well, as an investor in several banks, we're obviously working with our investee banks. At the same time, we're working with the government on the regulations around bankruptcy, around insolvency, that will make the resolution of the distressed debt easier. We're also, talking to the government and to VAMC to see if we can support, either through sharing some of the global best practice or, what we've done in other countries is actually cooperate with strategic distressed debt resolution companies and investing in buying some of the pools of distressed debt to try to get the process going. So we're very keen to support, and we see this as a key part of the banking sector reform.
And thank you so much for joining our program today. As usual, the final part is the summary of local securities market in the week. And that's all for now. Thank you so much for your attention. For comments and feedback, you can reach us via email at intovietnam@vitv.vn or give us a call at 0422208288. Goodbye for now.